Good morning or afternoon, depending upon where you are in this country of 5 different time zones. Thank you very much for joining Elixir Energy's webinar today. I'm Stuart Nichols, the Chief Executive Officer and Managing Director. Today, we're going to provide some updates around this significant and strategic transaction the company entered into, which was announced yesterday with Omega Oil and Gas, as well as what does that transaction mean for the company, its current activities, and its path towards down its strategic plan. So as we move on, please bear with me as I'm running the show in the background as well. So just to give you a quick overview of the transaction itself, yesterday the company announced that it would issue 19.43% of the company's shares on issue to Omega Oil and Gas. That would be in concert in a two-tranche placement that would raise up to $16.6 million across those two tranches. Omega will take a 19.43% stake as part of that process, and in tranche 2, Nero Resource Fund will also invest $2 million alongside Omega to take a bit over a 2% position in the company. These shares were issued at 0.041, so 4.1 cents per share, which is a fantastic price. That was the price of the day of the receipt of the first non-binding term sheet from Omega Oil and Gas. So effectively, a negligible or no discount for a substantial capital raise, which is a fantastic result for shareholders. The company will proceed through the timeline, which will have a EGM in early January, which that EGM will be there to approve that second tranche of the placement. And as I said, that will finalise the $16.6 million of capital. 13.936 million of that will settle on Tuesday of next week. As we move into what does this end up resulting for the company, you can see that we will issue approximately 339 million shares in tranche 1, as well as 65 million shares in tranche 2, leaving a pro forma shares on issue of 1.8 billion. At 4.1 cents, and noting that the stock is sort of trading in that 4.5, 4.6 range this morning, that would result in the company having a market capitalisation of $75 million. When you start to look at the pro forma cash, will sit at around 25 or just slightly over $25 million, as well as an expected refund of $9.7 million across the drilling campaign of the Laurel 3 appraisal well. That means that the access to capital, or the capital budget that the company can work with over the coming period of time, is up to $35.3 million. So almost 50% of the company's market capitalisation is underwritten by its existing cash on hand, as well as its forward refunds due to the advanced finding that has been secured at Laurel 3. The rationale for this transaction is pretty straightforward. You know, the company has been looking for validation given its very high quality suite of Taroom Trough assets that sit around the dominant player of the Taroom Trough being Shell. Omega's investment into Elixir is recognition of the importance, scale and quality of those assets that sit on the western flank, a very well-defined part of the Taroom Trough to date, due to the scale on an amount of money in wells that Shell has invested along that side. The 4.1 cents per share is a great way of bringing capital into the business at a low level of dilution for the pricing. Traditional capital raises for small resources companies can attract discounts of up to 20%. To be able to do that at approximately the price of the day of receiving that term sheet is an absolute boon for the company. Bringing in an investor like Omega as well, it also creates a foundation of value in the company. They have they're obviously there to influence the business and to make sure that they have got a seat at the table, or position as well, to help influence how maybe potentially infrastructure is rolled out on that western side of the Taroom Trough, and also to understand the information as it's generated from the drilling campaigns at Elixir and how that may influence some of their activities as well. by virtue of a lot of the rights that Omega has been issued as attaching to their shareholding, they're going to be a sticky shareholder. And I think that's a really important part to understand why this has been a great transaction for Elixir shareholders. And uh, that means that Elixir will be looking to maintain their position as that major shareholder in order to be able to maintain those rights. Those rights are the fundamental reason why Omega are here, and being able to bring in a very solid amount of capital, up to 16.6 million, and not have those shares flush back into the market as what can be symptomatic of traditional capital raises, is a really good boon for the maintenance of momentum of the Elixir story as we head towards drilling in early January. Omega has also secured participation rights, any future capital raises, which means that we now have a near on 20% shareholder looking to maintain their position. If there are any future capital raises in that the company is required to make, we believe that Omega will be there as a supportive shareholder to ensure the company is well capitalised, they maintain their position, and those attaching rights that I just spoke about. It wouldn't also surprise you that we, as Elixir as being the largest acreage holder in the Taroom Trough with a substantial resource position, 2.8 TCF and counting at the moment, that the company with a $60 million market capitalisation going into what will be one of the most highest impact wells in the Taroom Trough drill to date in early next year, that the vulnerability of the company is incredibly acute to a low-priced potential takeover. Having a significant shareholder as Omega sitting in our register strengthens our position with industry players and provides a strong degree of market resilience as we move through 2026, which I believe will be a huge year for oil and gas and for the Taroom Trough, but could be a challenging time in global economies. And then really the piece that we are here to talk about today is what does that new capital do for the company, and that helps us unlock phase 2 of Elixir's strategic plan. That means that we are not only just achieving our phase 1 retention objectives that I laid out in May of this year as part of our strategic plan, but we now have a path to reserves. We can demonstrate with the capital that we have and the activities in front of us that we may be able to convert a good portion of those 2.8 TCF of resources to reserves, which is what will fundamentally re-rate the value of this company. Talking about some of those additional attaching rights, those have been two-way in the negotiations with Omega and Elixir. Some of the rights we have been managed to be able to, I would say are in the benefit of Elixir. We've walked through some of those rights attaching to Omega. There's a couple of board seats, a right to sit in a technical committee, potentially second staff in if they're by agreement. There are rights that I think are there to also protect Elixir shareholders and the growth of their share price and their ultimate value of the ownership of the company. So those include a couple of key ones, and I'll just walk through two of those. First of all is a standstill. So Omega is an incredibly well-funded early stage Taroom Trough operator. They've had a lot of success in their Canyon project to date. They do have growth aspirations as outlined in some of their releases in the last 24 hours. The standstill that we have with Omega will give Elixir a period of time to deploy a decent portion of the capital that we have just brought in, which will ultimately de-risk our assets, potentially prove a path to reserves, and then that would ultimately look to re-rate the price of the trading of our securities and increase the value of the company. So that standstill is quite important for allowing us to deliver against the things that we have raised this capital for. And then secondly, there is what is classically called a put up or shut up clause in there as well, which covers for a period of 12 months. If there is a proposed change of control transaction to the Elixir board, there's a series of processes that need to be gone through, but Omega will ultimately be given the opportunity to either put up an equivalent or superior proposal to Elixir shareholders, or ultimately end up in a situation where they will need to agree with the Elixir board recommendation either to proceed or not to proceed towards that change of control transaction. So the opportunity or the optionality of maintaining a potential change of control transaction to an alternate third party in the future has been secured by that specific clause, and that's all been detailed in the release yesterday towards the back in the appendix. I would encourage shareholders to read that in detail. Moving on to the new form of the business, as you can see here, the management team, which I have just recently finally put in place, which includes myself, my Chief Operating Officer, the previous head of drilling from Strike, Kingsley Rutherford, as well as the previous CFO recently announced as our new company secretary and CFO, Justin Farravon. In our boardroom, we're going to be joined by two new Omega nominees. Those nominees will, be very supportive of the company's existing strategy. That's exactly why Omega is there to be an investor. We will benefit from a lot of the shared experiences the Omega board will bring from their governance and their management of Omega to Elixir, and it will help us grow in the sophistication of our governance frameworks in a quicker time frame. As you can see from the chart, since the day that I started at Elixir, the stock was trading at 1.8 cents prior to the day of my arrival. We've done a transaction very close to the top of the trading window since that sort of 6 to 7 months or so since we started. That's a really important thing to point out. It's very rare for a company to raise a substantial amount of capital and therefore the stock to trade upwards. And that can be, that's a reflection of the quality of the transaction that we have done with Omega. Looking at the potential ownership structure post the Tranche 2 placement, you can see Omega sitting there at 19.43%, Nero at around 3%, and then board and management at 2%. So the key thing to recognise here is that existing shareholders continue to own this company. They are the majority of the owners here, and myself and the existing Elixir board are here to represent you and your interests, and we'll make sure that we continue to prosecute those in cooperation with our new major shareholder, Omega. And so we welcome that. Getting on to the activities that we're doing. So now the bringing in of this additional capital allows us to be funded for not only phase 1, but phase 2. A reminder, phase 1 is about securing 100% of our acreage, making sure that all of our work commitments have been met, our permits are in good standing, and then converting a lot of that acreage into what we call potential commercial areas or retention licenses. The work that we're going to be doing at both ATP 2057 and 2056 will allow us to earn our 50% working interest into those permits, but there is opportunities to actually go further than that. Recently, we also had some success at Diona, which we drilled with our partners there, Xstate. That success has bred new opportunities to deploy new capital, and that brings in additional work commitments that we would like to pursue in the frack and test of the Diona 1 well, which will potentially yield a production outcome and potentially cash flow generation in the coming 6 to 12 months. But what we want to do is not only meet our objectives to secure 100% of that Taroom Trough acreage, benefit from the rising tide that will be going on around us through the enormous amount of investment that will be going on in the Taroom Trough over 2026, but also take the company on that next step. And that next step is about demonstrating that we can convert resources to reserves, and we've got 2 kicks of the footy at our goals for that. Not only do we have that at Diona 1, which could be a very fast path to market for potential cash flow, but really at Laurel 3. With the incremental expenditure of $8 million on top of the about $12 million required to drill case, frack and test the Laurel 3 vertical well, we can put a horizontal well in place, potentially into what we believe would be the Tinner 1 or the Dunk Sands, the similar reservoirs to what Shell has been prosecuting, and demonstrate that we can produce gas at commercial rates and recover gas at commercial quantities. And that will be the beginning of that initial resource to reserve conversion, which across our 500,000 net acres it can have an absolutely compounding effect to the valuation of Elixir and the valuation of the Taroom Trough acreage. Talking about that little bit of incremental capital. So what we can see here is the capital that was likely to be required to drill and to drill, do the R&D work required at Lorelle 3, as that's become qualified for R&D, as well as then case and frack that vertical well. Now you're going to spend about $12 million in totality to do all of those activities. The R&D will qualify you for up to 48.5% a refund on that. However, that vertical well, apart from me being able to physically show you that we have the petrophysical attributes in these permits that match the contingent resources that we already have in ATP 2056 of 1,057 BCF equivalent Elixir share, the flow testing of that vertical well is very unlikely to generate flow rates that are demonstrable to convert a reserve. With the application of a horizontal or lateral section to the Lorelle 3 well of 1,000 meters or more, which will cost us approximately an incremental $8 million, we are able to take the company on that journey towards a reserve conversion. Also, the expenditure associated with that lateral will be eligible for the R&D refund. So that R&D refund actually increases up to $10 million. And so our net cost to not only complete Lorelle 3's work commitments, but also to take that on that journey to reserve conversion is a net cost to the company of around $10 million. Now, why are we going to do that here in ATP 2056 at Lorelle 3 rather than at Daydream 3, which was what was originally conceived as the location for that phase 2 investment? And the reason why we're doing that is because we have a 2023 vintage seismic line that is effectively being shot and acquired in the direction of the drilling that we would like to do for that lateral well. So we've got really good geophysical and subsurface control through that seismic line. We can map the dunk sands, which are easily mappable because they sit in between the two Wallabella coal members. We can see those dunk sands in quality similar to geophysical responses that we can see in Shell's acreage that correlate with their well results. We can see those dunk sands. They are present at the Lorelle 3 location and are exhibiting some of the same amplitude and responses that we would like to see. That subsurface position is actually validated by our joint venture partner, Santos, a $22 billion second largest Australian oil and gas company out there. Santos have been, actually picked the well result originally, and we are coming in to effectively execute that work program on behalf of the impending joint venture. And so that validation should not be underestimated. That physical location at Lorelle 3 is also around 10 kilometres away from the very best penetration of the western side of the Taroom Trough to date, the Dunk 1 well, which had 37 metres of net pay, 100% net to gross in the Dunk sands, and is 13 kilometres away from Dunk 5, which is the very best flow rates that we have observed in the trough to date. And those flow rates are going to be reconfirmed as Dunk 5 is on its way to a 6-month long-term test. So, we have a really great geological and geographical location to being able to replicate some of Shell's results. We've also secured land access. Cultural heritage clearance has been done over the drilling location. Those achievements should not be underestimated. Being able to take maximum advantage of those in an early stage is what we're looking to here. We've also been able to secure Shell's recently imported heavy-duty H&P rig. That rig is will be the best rig in Australia once it stands up. It's already in the port of Brisbane and will mobilise to the Lorelle 3 location commencing on the 12th of January. Being able to use that rig, which is specifically designed for drilling long reach horizontals for that exact purpose, gives us the confidence that we're using the right equipment in the same reservoirs as our next door neighbour who is much further down the road than us. Because we've qualified for R&D as well, we'll get 48.5% of the total cost of the Lorelle 3 drilling testing back. And that is a really, that allows us to take, that's our lowest cost of capital, our R&D grant. secured through our advanced finding certificates, being able to use that to take the company as far as possible, which will cover 3 financial years of activities, is a really important moment for making sure that we are using capital in the most prudent manner possible. And then finally, this chart here shows you that a net cost to Elixir shareholders to take Lorelle 3 towards a reserve is around $10 million. For me to drill a dedicated lateral well at Daydream 3, right up against Bathurst 5, which is next to the Shell acreage, but due east of that location, that would be an $18 million standalone exercise, which we would look to do after we've completed our phase 1 activities. Given we're spending an incremental $8 million here, this is a $10 million saving of overall capital to reach the same strategic outcomes and objectives as what we would have planned under our existing strategic plan in discrete separate phases 1 and 2. Except the benefit of this being that we can do this somewhat 12 months earlier and faster. The well is due to spud in the month of January. Mobilisation starts on the 12th. That is all contracted up, and we're going to be drilling into a very large and existing resource, which has got great subsurface qualities. So that is a lot of the reason and the rationale that I have been able to walk down and understand that this little piece of incremental capital at this point in time is a great way of achieving an accelerated series of strategic outcomes. So it's an excellent candidate for phase 2. As I said, the well, let's just talk through that. We will mobilise on the 12th of January, approximately a 10-day rig move. We will spud around, just before Australia Day in January of next year. We will drill the vertical well down to dunk level. We will then conduct a conventional coring. We will core the dunk sands, and we will then proceed to drill down to basement, where we will collect both sidewall cores of the Overston and Lorelle sands, and in any other dunk sands that we have missed in the conventional coring, as well as collect nuclear magnetic resonance logs, as well as traditional logs that will allow us to do petrophysical analysis of that well. I believe at that point in time, we're going to have really great subsurface control. We will then plug that well back up to the intermediate casing point, and then we will start to lay in a horizontal. Now, that horizontal is currently envisaged to be at least 1,000 meters, as you can see on the picture here. That 1,000 meter, this is where 2,000 meters will get you, and that will pass through 3 what we believe are channels going through towards west to east along that seismic line. And that can potentially yield an enormous amount of exposure to very high quality reservoir, which, upon multi-stage fracture stimulation, which we are all funded for now, and a 30-day flow test, we believe we're going to have the data to show everybody that the Taroom Trough is everything that it's promising to be at the moment, plus more. And it will be not only the major new source of gas into the deteriorating East Coast gas market, but will also underwrite a very successful and long-term export industry here in Queensland. The reason why you should you follow Omega, who's educated, astute, very clever investor, supported by 2 very well-known resource investors themselves, is because we've got a huge acreage position. We surround the primary area of investment in the trough on the western side, which is primarily prone to a gas condensate play in the basin-centered gas setting of the Tinawano dunk sands. We've already independently certified 2.8 TCF, and with the successful raising that we have just now and capital that we've brought in, we can now take the company on a journey towards at reserve conversion, which, as you can see, as you start to chip away at 2.8 TCF of resource conversion to reserve, this company could be worth significant multiples of its current trading price. I would encourage you to look in detail at the disclosure from yesterday, to follow our plan. It's all laid out. Not only do we have the drilling coming up at Lorelle 3 in January, that will be followed by the simulation and testing of the Diona 1 well, which could potentially yield a production and cash flow outcome, given its proximity to existing infrastructure. We'll then come back and then do the fracture stimulation and testing of the Lorelle 3 well, which will hopefully result in the conclusion of both phase 1 and phase 2 by early Q3 next year, in the booking of the maiden reserves that we see in our Taroom Trough acreage, whilst we've also done some seismic and defined additional opportunities in our western side, Tinnawan and Dunk Sand play. That happens against the backdrop of many wells being drilled by Shell, Omega, bid rounds that are going on, extended production tests that will occur, as well as additional seismic. This is a really exciting place to be. There's nowhere else in Australia where $350 billion of market capitalization is being deployed regularly, in such aggressive quantities of discretionary capital. This is a great and exciting play for investors that are looking to participate in the East Coast gas dynamics. And I encourage everyone to join alongside Mega and become shareholders, or to grow your position in the coming months as we commence operations in January. So that will conclude my formal remarks today. I will do my best to go through some Q&A. So bear with me. I have seen some serious number of conversations coming through. We will start with Saul. Hi, Stuart. What are you expecting in terms of Taroom wells in 2026, other than Elixir wells, as other wells could be catalysts for Elixir too? Yeah, so I was expecting a multi-well campaign from Shell. So that would be 2 to 3, potentially 4 wells over the coming 12 months or so, using their brand new rig that they have got. I don't represent Shell, so the questions are obviously best placed for them. Omega, our new major shareholders, have made some disclosure about a 3-well campaign. I know they've signed up a lot of dedicated wells and option slots on the H&P rig as well. So there's multiple wells that are going down on that eastern side of the Taroom Trough through their Canyon project and other stratigraphy that looks prospective. So, we wish Omega all the best. And, I look forward to being able to share some of my learnings with them to make sure that they have an equally successful campaign as what I intend to have as well. And then moving to the next question from Declan, just confirm the timing on the Lorelle 3 lateral. So that will be immediately during the Lorelle 3 drilling. So it'll probably take us about 20 days to drill the vertical, core the dunk sands, do all the logging, collect the sidewall cores, and plug back the well. So day 21 or so, we will then kick off that lateral section. I think we're looking at a 45 to 55 day well in totality. The rig will then be handed over to Shell, which will then mobilise to their first well in their campaign. And then from Trader 10, can you please provide an update on the dewatering status of the wells in Mongolia? So as part of my decision to join Elixir was that the Mongolian project was not moving ahead as what was ultimately envisaged. As a result, the board and I made the decision to write off the capital expenditure associated with the Mongolian project, and through Neil, who was the previous managing director, he placed the assets into a minority-owned subsidiary. So we own 49% of a separate company that owns those assets now. So we don't have any ongoing exposure to capital requirements or future liabilities. There is still inherent value, I think, in some of those Mongolian assets. We have seen other Mongolian coal seam operators who are publicly listed, like TNK, starting to progress towards success. If there is a way to realise value for Elixir shareholders through the monetisation of our share in that Mongolian company, we will prosecute that at the time. We are very 100% focused on our assets in Queensland. We believe that they're worth multiples of the existing market capitalisation, and that's where we will be spending our time, our capital, and our technical expertise. But we won't be ignorant to a potential commercial exit in Mongolia if one is presented. So hopefully that helps answer that one. Moving to some other questions. David B, you mentioned Shell success. Do you have data on their successful wells? David, there are 3 or 4 publicly available well logs inside of the Shell permit, which we have used to do a lot of well to seismic ties, given that the Obiston 3D seismic campaign is also publicly available. Later in 2026, the Bathurst 5 and the Dunk 5 wells will become publicly available as well. There's sort of a 2-year time lag from drilling to when that information becomes publicly available. So we've been using what we've been able to access publicly. There's more data coming, and I'm sure that that's going to continue to build a very strong narrative of our acreage that surrounds Shell to the north-south, somewhat inset as well as due east of their key activities. Okay. That sort of looks like all of the questions. So Q&A. Trader 10 has asked, will you revisit Daydream 2 in the near future, considering the rig wasn't moved? We could have got better TCF results. I have spent a lot of time, Trader 10, on Daydream 2 and doing reviews and what is the risk profile associated with re-entering that well and recompleting. I guess the resulting question is, to what end is a really good point here. So let's say we managed to enter Daydream 2, we could recomplete it, install a velocity string, and continue to progress the 2044 permit. The Daydream 2 well would unlikely yield a commercial flow rate of gas that which would convert some of the contingent resources in ATP 2044 to reserves. And so the way I look at it is that Daydream 2 could be a potential future producer as part of an overall regional development in that western side. And so in time, I think that the risk and reward, was the juice worth the squeeze sort of question going to be justifiable to re-enter Daydream 2 and then do a retest and a recompletion on that well. But until such time as I can see a path towards cash flow, the additional technical data is probably not going to generate a change in the current underlying risk profile or asset base of Elixir. And as a result, Daydream 2 activities will be deferred until we see that change in the current landscape. So hopefully that answers some of your questions. That is pretty much all the questions I have in front of me. If anyone has their hand raised, please let me know. There's a chat going on, which I'm sure is full of derogatory commentary, but we will see what we can do. There are some questions in here. Scott Ashton, congratulations on the deal. What is the approximate volumes for Lorelle 3? Do you expect some liquids in the event of commercial success? So that's a pretty tough question to ask, given that this is unconventional gas, Scott. So there is 1,057 BCF equivalent net 2C resources in ATP 2056. The way that we would see unconventional reserves work is that wells that have demonstrated that you've got a commercial flow rate of gas and a commercial recovery of quantities of gas, you would get a 2P developed reserve around that well up to a couple of well spacings, and then you would get a 2P undeveloped reserve, further away from that well bore. I have spent some time with ERCE. Sproul, our reserve certifier, our resource certifier, and we're talking through that methodology at the moment about how they will take that information and then move that towards a potential reserve. I would like to think that 2P undeveloped reserve could be quite substantial, and could underwrite that re-rating of the business's valuation. Andrew, how is the low of 4.1 cents a great result? Okay, so let's say we wanted to continue to prosecute phase 2, as I've demonstrated to you. I believe that an incremental amount of capital being spent there, can create these much larger valuation outcomes for the company in a nearer term time frame. If I was to raise capital in a more traditional sense, you may have been expecting the last time that Elixir raised capital, which was under previous managing director Neil Young, raised capital at 3.5 cents. with 2-for-1 attaching options exercisable at 12 cents. So, 4.1 cents, bringing in a sticky, institutional, educated investor that validates our assets, at effectively the price of the day of the receipt of the first term sheet, I think is a really good result for shareholders. And I would encourage you to find me a better result for small speculative resource companies out there, doing that. So I'm all ears. My email's on the bottom of all of the company announcements. I welcome your feedback. You've made some other comments about being a long-term shareholder and you've been there for a long time. I can't take carriage, I'm sorry, for your share ownership prior to the day of my arrival. All I can say is that I have worked with diligence and prudence to make sure that we prosecute the company's strategic plan as released in May of this year in the lowest cost, lowest capital way forward, in the most accelerated time frame, so that we can go a long way to getting you back in the money. Except it does not, somewhat from regressive takeover. Something around a takeover, I think I've gone through that. Omega release pursuant, Andrew's got a lot to say today. Quote from Omega release: pursuant to Elixir's farm-in obligations, Omega can request Elixir to elect to execute a horizontal section from the Lorelle 3 vertical by 1st of February. That is a drafting requirement. That's, Omega has made the investment into Elixir to ensure that we drill the horizontal leg at Lorelle 3. That is 100% the company's intentions. It's 100% the reason why we were looking at potentially bringing in some additional capital. That is just a term there to ensure that we do what we say we're going to do, and Omega has some protections to ensure that that is the case. Omega's release says that they've got Elixir provides a low-cost entry into complementary acreage. That's absolutely true. We are trading at probably one of the lowest resource multiples of any listed Australian ASX, Australian listed gas explorer and developer. I would encourage you to be as astute as Omega and invest alongside them, because they wouldn't be making an investment of that scale given their current size if they did not see value. I'm here to make sure that I prosecute value, and I would encourage you to look at and to take their validation and invest alongside them. Trade 10 more on Mongolia. I think we've gone through that. Okay, most of this is just into banter. Okay, and then we'll get to Scott Ashton again, and he's asked around the volumes. Question around indication of the NPV of an undeveloped TCF of Taroom gas reserve. Okay, I will use Western Australia as a number I got very au fait with, and then I'll sort of convert that to the East Coast. So in Western Australia, we got very close to a point where we would understand that a BCF of 2P reserves was equal to about $1 million of trading value of a company. Now, the gas price in the East Coast of Australia is twice as high. So a BCF of gas, at twice the valuation of 2P reserves, not 2C contingent resources, is probably worth about $2 million of trading value of the company. And so a TCF being 1,000 BCF. So, someone sitting in the East Coast of Australia with an undeveloped 2P reserve of 2,000 BCF or 2,000 petajoules, I would expect, 1,000 petajoules, I would expect to trade close to $2 billion. That's probably a sort of little watermark or earmark that you can use to try and do some of your back of the calc valuations. Can you get back the rig for a follow-up Lorelle within 12 months if that was needed for reserve conversion? From Lawrence Gretsch. Lawrence, there are other rigs available that we can drill wells with. Obviously, the opportunity to use this very high-quality rig for what is a very important well for Elixir, was a lot of the drivers of our decision-making there. So, I'm not too worried about the availability of iron. There is lots of iron stacked up in the immediate area, rigs that have been used in the Taroom Trough to date. So whether we get additional slots on the H&P or in the future, or we use other rigs which are capable of drilling similar wells to that of the Laurel 3 horizontal, we'll make that decision if we are required to. But this is going to be one kick, one goal. From Dean, are there any plans to move Elixir's head office to Perth? No, currently I'm very happy with the way that the company is set up. We've got very low overhead. I mean, you can see me running my own webinar here, so juggling some Q&A. There is, the company is fundamentally a Queensland business. We're going to be looking to grow our presence in Brisbane and Queensland as a priority. Getting the company back and stabilised, building its credibility again in institutional markets of Australia, has meant a little bit of a horses for courses. Where the right competent people are, we are using that sort of approach. But as we start to, really, solidify our position, we are a Queensland business and we intend to grow our presence there. Our Chief Operating Officer is operating out of Brisbane now himself. So, that would be an answer to that question. So that is all of the chat as well as the Q&A. I'm going to give you about 30 seconds more to ask any further questions. Otherwise, we will call that a day. Please, my email address is at the bottom of all of the announcements as well as on the screen right now. If you do have any follow-up questions, let me know. Understanding and learning what we're about to embark on, I think, will build confidence to invest alongside Omega, and that's what I would encourage everyone to do today. Go Elixir, go Omega, and go Queensland. Thanks, everyone. Bye.